for equipping us
Thank
with
you.
such powerful information in your platform for sure. All
Thank you.
right.
Thank you. Thank you so much. I appreciate you.
Yes, indeed. Appreciate that, Christina. So let me just give you all a quick intro for those who don't know who I am. My name is Jeff Badu. I'm a licensed certified public accountant. I was born and raised in Ghana, west side of Africa, and came to the US when I was 8 years old. And fast forward, I attended the University of Illinois at Urbana-Champaign, where I received my bachelor's degree in accounting, as well as my master's degree in accounting. I went on to become a parallel entrepreneur and a wealth multiplier. I'm the founder and CEO of Badu Enterprise LLC, which is a multinational conglomerate in the finance industry. And our primary company is Badu Tax Services, which is a CPA firm, a tax firm that provides tax preparation, tax planning, and tax representation services to individuals and businesses across all 50 states in the US. And we also have clients that are physically present, physically based in over 25 countries at the moment. Special out to the World Cup, which is going on right now. Very global, things that we're doing in the world. And so happy to be a part of that global economy, that global environment. Very passionate about financial literacy. We have the Badu Foundation. We're teaching financial literacy right now in the program to a group of students, 6 to 18-year-olds. And so truly passionate about that. And that's mainly why I'm here today. And then my purpose in life is to inspire and support the super hungry to take hold of infinite resources in order to create an abundant lifestyle. All right. So my contact information in the chat. Special out to Ivy and the Seven Ways to Wealth team for putting that information in the chat. So yeah, anybody who's interested in getting tax services or just want to discuss more about the topic we talk about today can feel free to click that link in the chat. It's a questionnaire, just 1 to 2 minutes, just takes you 1 to 2 minutes to fill out very quick. And then our team will reach back out to you within 48 hours to basically proceed on with the next steps and scheduling a consultation with you. All right. So why are we here as far as this segment is to talk about trust taxes. Give you some tips when it comes to the taxes. Now, one thing I would say is that the taxes can get a little pretty complicated. Albert Einstein, one of the greatest philosophers on the planet, he once stated that the income tax is the most complicated thing on the planet. The income tax is the most complicated thing on the planet. And what Christina Yvette and the team, the Seven Ways to Wealth team, have unlocked and unleashed for us is a topic that less than 1% of the entire world is even familiar with, right? This used to be only available to the 1%, the infamous 1%. Your name had to be Jeff Bezos, Elon Musk, Warren Buffett, John D. Rockefeller, Mansa Musa to get this type of information, and so thanks to Christina Yvette and the team, we now have access to this information. And what do they say about information and knowledge? Knowledge is potential power. Now, what you decide to do with it, when you turn it into true power, is when you actually take action, when you set up your trust, when you complete your tax returns, when you move your assets into the trust. Now that knowledge all of a sudden becomes power because you're actually doing something with it. If you're not doing anything with it, I mean, what's the point, right? And so, with that being said, this next segment is going to teach you about trust taxes. And so, we're going to start off with the trust tax return. This is the 1041 form for 2025. This is for demonstration purposes. And as far as the presentation, I'll be speaking for anywhere between 20 to 30 minutes. And I always like to leave enough time for Q&A because we always have some amazing questions from the group. And so I always like to leave enough time for Q&A because this is a complex topic. I understand it. So if you need me to repeat something or, elaborate on something, please let me know. Please feel free to type that in the chat. And then in the Q&A session, towards the end, we'll be able to answer some more questions with you as well. All right. So this is the 1041 form. This is the name of the form. This is the form that we use to file a tax return for estates and trusts. Estates and trusts. Now, we'll be focused more on the trust component today because that's what the Seven Ways to Wealth team has been going over with you. So at the top, we got the basically the year that the trust is in place. So let's say you form your trust on January 1st, 2025. And then you're going to have a fiscal year end of 12/31, December 31st of 2025, which is also known as a calendar year. That means you're a calendar year client. All right. Meaning you report your information from January 1st, the beginning of the year, to December 31st, the end of the year. Very, very simple, very straightforward. All right. On the left-hand side, you want to check the box of which type of trust that you have. And so with the trust that Christina Yvette and the team, the Seven Ways to Wealth team are, working on with you, these are all going to be complex trusts, basically. Complex trusts. All right. And this is usually the business trust, the family trust, and then the ministry trust. All right. The business trust, family trust, ministry trust. This tax return will only apply to the two trusts, the first two trusts. All right. It will not apply to the ministry trust because churches and religious organizations are exempted from filing, not only just paying taxes, but filing a tax return in the United States of America, land of the free, home of the brave. So you do not have to file a tax return for your ministry trust, the third trust. You only file a tax return for your business trust and your family trust. So the 1041 is only going to be used for the business trust and the family trust. For today's demonstration, we're going to be focused on the business trust, your breadwinner, your bread and butter, your primary income source, essentially. All right, so you're going to check that box. All irrevocable trusts, the type of trust that you are setting up, all of those are complex trusts. What does that actually mean in reality? A complex trust gets to choose how much it distributes to its beneficiaries, right? If you have a simple trust like a revocable living trust, where you do not need to file a tax return, then that means you have to distribute all of your profits, or your K1 basically has to be 100% of whatever showed on the net profit line item. If it's a complex trust, you get to choose. This is one of the benefits and the advantages. You get to choose how much each beneficiary gets. So you have some flexibility. You don't just have to do 100% distribution to your beneficiaries. You can choose how much you want to distribute. That's the difference between a simple trust and then a complex trust. There's some other legal differences too, but for the sake of taxes, we're going to be focused on the complex trust. All right. You put the name of the trust. So this is the John Doe Irrevocable Business Trust. All right. Then you put the name, not your name, but your fiduciary name, right? Your fiduciary name. Who is the trustee or the fiduciary of your trust? So in this case, we've hired a third party trustee. And so we're going to put Trust Company A, and they're the infamous 123 Main Street, right? We're here in Dallas, Texas. It's where I'm based, Dallas, Texas. Right. And then you put the EIN number. All trusts are assigned a tax ID number, EIN number from the IRS. So you put that. That's how the IRS identifies whose tax return this is. And then you put the date that the trust was created, January 1st, 2025, for example. All right. And then you check your initial return box here and the number of K1s. Let's say that your family trust is the only beneficiary of your business trust. Then you're going to put 1 for the K1 number as your beneficiary. Now, how does this actually work? So in the top section, you're going to start with your income. All right. So the thing about the trust is we're going to use an example of a lady. Her name is Brianna. She's 30 years old. She came to a workshop just like this. She loved the information and she set herself up for success. All right. And so with Brianna, the first thing is she has a bank account in the name of the business trust. Now, you notice that I'm going to be very careful with my words today, and I'm going to be very precise and meticulous with the way that I say certain things. All right. You're going to notice one trend in the name of the business trust. The income is going to be assigned to the business trust, right? You're going to be hearing terms like that. And so she has a bank account, a savings account in the name of the irrevocable business trust. All right. And so with that, she receives interest income. So guess where she reports that? She reports that on line 1 of the 1041, the trust tax return. All right. She owns an LLC for trading stocks. She also does some stock investing on the side, and she decided to form a separate LLC for that. Do you have to? Of course not. You don't have to. But she decided she wants to break things up for easier tracking purposes. And then she just wants to separate everything from a legal liability standpoint. And so she earns what we call dividends, a return on investment on her stocks. And so she's going to report that on line 2A and then also on line 2B as well. All right. Then she is a real estate agent. Her main hustle is doing real estate. So she owns an LLC that is doing real estate transactions, sales and purchases on behalf of her clients. All right. And so the form that we're going to use for that to report the income and expenses, the write-offs of her real estate agent business is going to be the Schedule C, the same form we use for the 1040, by the way. Why do we use a 1041? Because it does one better. It used to be part of only the 1% of the people in the world, the top 1% wealthiest people in the world. And so the IRS upgraded the form to a 1041 instead of a 1040. All right. But now we all have access to this beautiful form. Right. So you can use the Schedule C. And Brianna, let's say she does 500,000 in revenue. Her expenses, her write-offs, her AirPods, her cell phone, her trips to Bora Bora, Bermuda, water that she drinks to stay hydrated during meetings, right? All of that is going to be tax deductible on the Schedule C, right? She's not going to use an S Corp because S Corps cannot be owned by irrevocable trust. Once again, an irrevocable trust cannot own an S Corp. So that's why she's not going to use an S Corporation. She's going to use the Schedule C, a single member LLC. All right. And the single member LLC, the owner of that is going to be her business trust, her main hustle. She does some stock trading on the side, and so she buys and sells stocks. So she has her LLC for that. That's going to go on line 4 via the Schedule D. All right. She owns rental properties. She practices what she preaches that she should do. She owns several rental properties. And so she's going to have an income and expense report, a profit and loss report for each property separately using the software like QuickBooks, which tracks her business income and expenses. And so she has her for 3 rentals, which she owns them in 3 separate LLCs. She's going to attach a Schedule E for each property. Right. Notice how she's separating everything. All right. Can the business trust own everything and just not have these separate LLCs? 1000% you can do that. But Brianna, her preference was to have separate LLCs for each business function or each revenue stream. Basically, she wanted to have a separate LLC for that. She owns a small farm, right? She owns some chickens, some cows. And so she's going to use a Schedule F, also owning a separate LLC. All right. She did sell one of her properties, and so she's going to use a schedule or form 4797. She sold a property, replaced it for another property. All right. So all of that is going to lead to her total income. All right. So that's going to go on line 9. And then as far as expenses specifically related to the trust, that's going to go in the deduction section. So she has a business loan out there in the name of her trust. So she's going to report the interest expense of the trust. All right. Then she pays basically some taxes, not necessarily income taxes, but she pays like some taxes that's out there. So she's going to report that on line 11. Fees that she pays to the trustee, the fiduciary. She has a third-party fiduciary. That's going to go on line 12. And then where does money that you send to your ministry trust go? That goes on line 13. All right. Fees that she pays to us as her CPA firm, that goes on line 14. And then the infamous other deductions. All right. And so all of that is going to get tallied up into total expenses. All right. And then money that she sends to her family trust to pay for family trust expenses, that's going to go on line 18. So that the goal here is to get line 23 to 0, right? To 0, because anything you put on line 23 is going to get taxed at a rate of 37%. 37%, the highest tax rate for a trust. You do not want any money left in the business trust when it's all said and done. All right. And so that's going to be something to keep in mind. All right. And so that's going to lead into her total tax section, right? That's going to lead into her total tax section. So her taxable income times her tax rate is going to lead into the total tax amount. Now, the goal is to ensure that we don't have any taxes in the total tax line item, essentially. All right. And so the best way to really describe this to you is to demonstrate this to you, right? So we're gonna go and pull up a trust scenario of someone that has the three trusts: the business trust, the family trust, and the ministry trust, and they're gonna basically use this to essentially basically how do we save money in taxes through this trust structure. All right. So let's just say she has business trust income of $500,000, and then she has business trust expenses of $400,000. All right. What does that lead to? That would lead to a business trust net income of $100,000. Remember, her business trust income is mainly composed of her real estate agent business, her real estate rental property business, her stock trading business, her farm. All of that is going to be 500,000. And then her expenses, all of her write-offs, her clothing, her car, her cell phone, her travel, all of that is going to amount to 400,000. But she's going to have something left. She's going to have $100,000 left that she is the difference between the income and the expenses. All right. If she leaves that money in her business trust and does not follow a good tax strategy or good tax plan, she's going to be hit with a tax rate of 37%. 37%. All right. I can imagine nobody wants to pay that amount of money in taxes, right? And this is the same highest tax rate as an individual on your 1040 as well. And so $100,000 times 37%, that's a $37,000 tax liability. Without tax planning, proper tax planning, without moving the money away, moving the money around the way she needs to, she's going to incur a tax of $37,000. All right. Now, how does she prevent that? She creates a budget each year, as you should, for all of your trusts, all of your businesses. You should have a personal budget and you should have a business budget, one for each of your businesses. And you should be tracking it on a month-to-month basis to see how you're tracking with your budget. So based on her budget, she noticed that her family expenses, and these are things that she can't write off as a business expense on her Schedule C and all the other returns. So that's including medical expenses, her mortgage, right? And then some other miscellaneous personal expenses. She's going to move that into her family trust. All right. And so her family trust is going to have a budget of $75,000. What does she do? At the beginning or throughout the year, she transfers $75,000 to her family trust bank account so that the family trust can pay for her family trust expenses, right? Now she's left with $25,000 of taxable income. What does a wise person do with that? She transfers that to her ministry trust by the end of the year, December 31st, not January 1st of the next year, but December 31st of the current year. She transfers that money to handle her charitable affairs, right? Supporting her church, her ministry, anything that she does charitable related, she's going to be able to transfer $25,000 from her business trust into her ministry trust. Now she has total transfers of $100,000. All right. So now what's $100,000 of net income, net trust income, minus $100,000 of transfers, or $100,000 of business trust profit, minus $100,000 of the transfers between the other two trusts is zero. Now, instead of paying $37,000, she pays a whopping $0 in taxes because she transferred the money in the proper channels, the proper ways. Another term for transfers is distribution. Another term for transfers is donation to your ministry trust. All right. And so, how does this trust strategy work well? You got to make sure you have a budget. The money is moving around the right way. You're being very meticulous about your finances. And if you're not able to do that, number one, please start getting into the habit of it. But number two, you can hire people, you can hire individuals to help you organize these things, a bookkeeper, a tax preparer, a tax planner, a wealth advisor, things of that sort. And so that's how we can stay organized with this type of information. All right. So I know that was a lot. All of that is going to translate into the trust tax return, the 1041, which I showed you earlier. All right. And each of your business trust and then your family trust should be filing a trust tax return. All right. But your ministry trust does not have to file a trust tax return. All right. Instead, you just keep a budget and you keep your receipts for the transfers and the income and expenses of your ministry trust. All right. And so that's everything that I wanted to present to you today. It's a lot of information in a small amount of time. I always like to leave at least 30 minutes for Q&A. And so remember, the contact information is in the chat. Shout out to Ivy, Seven Ways to Wealth team, for putting that information in the chat. And so let's move on to the Q&A. If you have any questions, you can use the raise hand feature and ask your question, or you can type your question in the chat. And then to point out, the link that's in the chat is simply a link to take you to a 1 to 2 minute questionnaire that allows us to get to know more about you, your wants, needs, and desires, and then how we can best assist you and potentially work with you as your dedicated CPA or tax firm. And so with that, let's move into the Q&A. Let me go ahead and stop sharing and let's move into the Q&A. All right. Shout out to Ivy who put some information in the chat. And then Marsha says that is a mic drop moment. That was at 11:57 a.m. Thank you for that, Marsha. Appreciate that. All right, let's allow Kenya Johnson. Can you please unmute yourself and ask your question, please?
Yes, thank you so much for that information. Can you hear me okay?
We can hear you just fine, Kenya.
Okay, question. So, I don't know. I really don't like the IRS, and I'm not sure if I'm the only one that has that sentiment.
Probably not the only one.
But so once I transfer everything into my trust, if I have a personal issue with the IRS, are
Mhm.
they able to go after my bank accounts that's in a trust?
That's a great question. I mean, they can try, but technically speaking, in some states, you cannot attach a judgment to a trust, but the IRS has ways to do it. So the nice thing about being a business and a trust is you're a separate legal entity, right? You're separating your finances, personal
Mm,
business. That's why you don't want to commingle funds, especially when you have a trust, because they trust that you're not going to do that, right? No pun intended. And
right.
so, long story short, Kenya, probably not. They can't. But knowing the IRS, they can try to find the way. But with some good attorneys, some good paperwork, good documentation, good trust agreement, you're probably not going to be able to touch that on those assets.
Okay. And I'm in California, and I filled out the form, your form.
That's
So,
good. Okay,
I'm
that's
sure you
good,
do
Kenya.
taxes across the U.S., right?
That's right. All 50 states were virtual CPA
Okay.
firm. And so this is actually a home office that you see behind me here. All
Okay,
right.
wonderful. I'm sure we'll talk more.
Absolutely.
Thank
Sounds
you.
good. Yeah, please feel free to use that link in the chat and definitely looking forward to speaking with you, Kenya.
Yes, I did already.
Absolutely.
Thank you.
Awesome. Thank you, Kenya. All right, we got right now. Right now, please go ahead and ask your question. Unmute yourself, please.
Hi, thank you. My question is about the things that are inside of your family trust. Can the state come after inheritance? Any other types of taxes? Like some states, um, I guess like Nevada and these things don't have state taxes, but other
Mhm.
states have the taxes for on your wealth. So I'm just wondering, is there a difference between the family trust in that regard that's holding assets like your family home, and is that taxable? Um, I understand, I think for the business side of it, but what happens with the structure of the family trust?
Family trust is meant to hold your family assets like your house, your primary residence home, your car, right? Anything that's not directly tied to your business. And so, I mean, this is going to vary state law by state law. Every state has its own laws. Every state has its own thing when it comes to the trust. And so I would say that's definitely something you want to get with Christine, Yvette, and the team to talk more about, more in depth. But it's to answer your question, Ray, it's going to be based off your state law, right? I mean, the good news is once you establish a trust and you're doing things the proper way, you're putting the things in the name of the trust, and you're signing documents in the name of the trust, not your personal name, you should be fine. But it's going to be based on state law. Fortunately, I'm not here to comment on anything on the legal side or on the structure side of the trust, purely the tax side of things. From a tax standpoint, once the assets are in the trust, then it separates you from the trust, basically. All right.
Okay, so yes, that I get, but I'm saying that for taxes for your
Mhm.
family trust, the
Mhm.
only thing you're really paying taxes on is the property, for example, your homeowner's insurance or your taxes for that home that's inside the trust. You're doing
That
that
is correct.
separately as the trustee, right? But there is
That is
nothing,
correct.
no taxes that are going to be levied against the trust itself, family trust.
Yeah, I mean,
There's
there's
no
no
taxes
income
that will be,
tax. Yeah, so there's no income tax when you own a home anyway, right? So that's just property taxes you're
right?
paying, mortgage interest,
Right.
insurance, utilities. So there, with or without the trust, you weren't paying taxes to begin with on your primary residence. All
Right. No,
right, unless
I'm
you sold
talking
it.
about the trust itself, period.
Uh-huh.
There's no
Yeah,
taxes
there's
on
no
the trust
tax. Yeah,
itself. Got you.
you pay
All
taxes
right.
when you earn money, when you earn income. That's the only time you ever pay tax in the U.S. All
Thank you.
right. Yeah, no problem, Ray. And then let's go to Stuart, and then we'll hop in the chat, answer some of those questions. Stuart, please go ahead and unmute yourself.
Hey Jeff, can you come right back to me, man? I'm at the car wash real quick.
Yeah, I'll
Can I
come
be the
back to you,
next person?
Stuart. It's all
Okay.
good. Thank you for that. Yes, sir.
Thank
Let's go to George. George, please.
How you doing, brother? Appreciate this time that you're spending with us. Question in regards to the ministry trust. For
Hmm.
those donations that we're giving to the ministry trust, is there a particular form or anything that the ministry trust need to prepare and present to either the family trust or the business trust in order to protect them in case of they're audited or what have you? And also, my second question would be, what is is there a limit? I know that the donation laws seem to have been changed over these last 5 or 6 years. Is there a limit to how much I can donate to the ministry? Over.
Yeah, it's a great question, George. So as far as documentation, yeah, you want to have a receipt for your donation, and the 7 Ways to Wealth team does have in your portal, the access that they give you is templates, right? Are templates that you get. So you do want to fill it out every time you make a donation. You want to have it nice and documented and saved in your corporate files. So that's the first answer to that question. And then the second thing, is there a limit? No, not really. There's no limit. Yes, sir. Does that answer your questions, George?
So is there a difference between cash limit versus property limit, or there's really no limit,
There's
period?
no limit. Yeah, you can donate. If you got $100,000 you want to send to your ministry trust, you can send $100,000 there if you have the means to do it. Right. Of course, you want to have a budget. You want to make sure you're living, you're sustaining yourself. You don't want to do things just for the sake of taxes. Taxes are always secondary to every decision you make in life. And so the IRS says, hey, if you want to be generous enough and you have $1 million property, you want to give it all to your trust, your ministry trust, they're not going to stop you from doing that for sure. All
All right,
right.
thank you very much.
No problem. Thank you for that, George. Appreciate that. And I believe the limit that you're more so pointing to is regarding on the personal side. It's up to 60%. If it's not ministry trust, but your personal tax return, your Schedule A, and this is where the trust, becomes more beneficial, your Schedule A itemized deductions are only limited to up to 60% of your adjusted gross income, basically. All right. Stuart, please go ahead and unmute yourself.
Yeah, I'm back, Jeff. Thanks for. I appreciate you coming back to me.
Yes, sir.
Yes, sir. So yeah, my question is, so I recently just set up my trust. It took me a long time to get here, so I'm glad I'm finally here. So this year I definitely need professional help because every time I try to set up an organization or anything, it always fails because I try to do it all myself. So I definitely need professional help. So my question is, we were told that we can make loans on our trust. So if I can't find an asset at the time and I got cash sitting in my trust and I want to make it like a larger loan to another trust so that I could technically have that, make like a larger income. Like if I want to charge myself high interest on purpose, I know most people probably wouldn't want to do that, but if I wanted to, so that income, if one trust is doing good, like the business trust, and then my family trust just has cash sitting and I can't find a safe asset to put it in, if I can have like 100,000 sitting in the family trust and in the business trust, we're not sitting in the business trust really, but if I strategically put it there for a second and then had to, you know what I'm trying to say, like, or actually have the family trust lend it to the business trust so that the family trust is the one earning the interest.
Yeah, that's a great question, Stuart. Now, what if there was a world where you didn't even have to do all of it? Right? You just didn't even have to do any of that, right? Because here's the thing, and this is on a serious note, that when something is starting to sound way too complex, it's probably not a direction you should go. Like if it's just starting to sound like way too many moving pieces to the puzzle, you bring a professional, like, man, what's going on, this and that. To answer your question, Stuart, as long as you have a budget, that's the thing. Create a budget for the trust each year. Lay out what you think is going to happen. Doesn't have to be exact. It doesn't have to be precise. Just lay out, okay, I'm going to make $200,000 in my business. I'm going to spend 100,000 of that in expenses. All right, I'm going to have 100,000 left over. On my family side, I'm going to spend $50,000 for the household. All right. And then, I'm going to have some investments. I'm going to do my IRAs, 401ks and whatnot. That's going to be about 25,000 extra of that. And then I'm going to have 25,000 left in a year that I should probably donate to my ministry trust. So instead of the whole Stuart Wright borrow money here and then charging interest here, you don't have to do any of that. Can you do that? You can. But in this structure, you do not have to do any of that, basically.
Okay, I was just saying though, because like I said, for my family trust, if I have, I kind of got the cheat code. So if I had some money already just sitting there is what I'm saying in the family trust, and I'm trying to find low risk assets to put it into so that the safe, like something like a stock or whatever. But I ain't the hugest fan of stocks. So I'm saying if I know that my business is gonna be doing good on the business trust and then LLCs and all of that, money income flowing through that way, and if I just lend the money from my family trust to the business trust, so that could make and then charge myself like 24% interest or something like that. Like, you know what I'm saying? Like that don't sound reasonable. I mean, that, as far as like, at least so the money just ain't sitting in a bank account type thing. That's all. That's what I'm concerned about.
Yeah, that's going to create a Peter Paul scenario, right? One pocket from the same jeans to the next pocket, in that you get to write off a 24% interest on one trust, but then you're paying taxes on a 24% interest on the other trust.
Right, but I'm
Right.
gonna be to my ministry too, though. I know it's a lot of moving, like you said, it's a lot of moving pieces and everything. But I'm just saying, like, it ain't that's impossible. It ain't impossible to do type thing. I know it ain't what
Yeah,
everybody
you
else.
can do it. Yeah, you
You know.
can do it. So to answer your
Yeah.
question, yes, you can do it. Should you do it? We can find better strategies for you.
Okay. Well, I look forward
Yes,
to working
sir.
with y'all. I had set an appointment and everything, so I'm gonna talk with the person and hopefully we can start a fruitful relationship.
Hey, man, to that, Stuart. Definitely looking forward to it. Yes, sir.
Appreciate
Sounds good. All right, no problem. Yeah, anybody with any other questions, you can feel free to use the raise hand feature and we'll call on you. Let me go back to the chat real quick, though. Connie says, when applying for EIN, there was a statement that the closing month was December, but there was an option to change that with Form 1128. Does that have anything to do with the tax filing? Yes, you have to use the same date that you choose on the EIN as your tax return. That has to match one for one, no mistakes. All right. Second question, if the trust was verbally established in 2025, but no activities took place and the EIN was created in 2026, when does the filing taxes start? It starts 2025. All right. With multiple LLCs, info going into the 1041, do the LLCs also file tax returns? No, they do not. They just filed a 1041. The tax returns represent schedules. So Schedule C, Schedule D, Schedule E, Schedule F, the letters of the alphabet are what you use to put on your 1041. It's one tax return that you're submitting. That's the beauty of it. And then Orlando says, how much do you charge for your services? It depends. That's why we have that link that you can fill out. And then that way we can get to know more about you. And we'll create a customized package, a customized proposal with the pricing, and we'll present it to you. And so the first step is taking 1 or 2 minutes, filling out that questionnaire that Ivy put in the chat. And then we'll go ahead and get to understand you better so that we can see how we can help you. All right. And then do you put the trust on a monthly retainer? That could be a proposal in the proposal. Sometimes it doesn't make sense to do that though. So that's why we want to get to know more about you specifically. Do you do accounting services along with tax filing services? Yes, we do. Specifically bookkeeping services. Yes, we do also do bookkeeping as well. Let's see. Connie says she can't raise hand to ask questions in the Q&A. All right. Hopefully we answered your questions, Connie. And then Crystal says, hi, Jeff, do you provide business formation registered agent services? I would like to form my trust in Wyoming, but I'm located in Georgia. That would be a Christina Yvette and the 7 ways to wealth team question right there. All right. Yes, indeed. Christina says not the letters of the alphabet. Yeah, that's what the tax returns sound like sometimes. Most definitely. All right. So let's see. Connie says also, if you're transferring paycheck income to family trust, is that income or can it just be seen as an asset? Well, get this. You're going to now have to pay taxes on your 1040 tax return because it's paycheck income for your personal name, basically. All right. And so, yeah, it can be an asset of the trust. So to answer your question, it is an asset of the trust. So then you're just paying taxes on the 1040 instead of the 1041. All right, Ray, please go ahead and ask your question.
Okay, quickly, you mentioned QuickBooks. Is there a QuickBooks or one of these programs better when we're working with you to have something in hand to say, here's my stuff? Or is there another way that you would recommend that we prepare all of our information to hand over to you?
Yeah, that's a great question. I mean, you can use the QuickBooks Simple Start version and then have one for each business separately. That's one way. Or another way is you can use the Plus version. This is a lot more complicated, but it is more cost effective. You can use the Plus version and you can create different locations or basically business functions. So you can your business A, business B, business C, and you can track everything in that one QuickBooks account. My preference, my recommendation is usually create a separate QuickBooks account for each business. And that way it's easier for tracking purposes, but it is more expensive. And so to answer your question, Ray, it's either the Simple Start version, QuickBooks Online, or the Plus version of QuickBooks Online. Are there other softwares you can use? 1000%. It does not have to be QuickBooks, but a lot of our clients, most of our clients enjoy using QuickBooks. It does take time in the beginning to get set up and get it right. And we do offer training and education and resources for QuickBooks. QuickBooks does the same as well. So to answer your question, Ray, QuickBooks Simple Start or QuickBooks, the Plus version is okay to use, essentially. All right. Sounds good.
Thank you.
Yeah, no problem, Ray. All right, all right. If you got any other questions, feel free to use the raise hand feature, or you can type your question in the Q&A section of the chat. And Connie says, are the filing fees for LLC deductions on the 1041? Yes, it is. What if the return shows a loss? Yeah, either offsets other income sources on the 1041 for that year, or it just carries over to the next year, known as a net operating loss that allows you to carry forward a loss 20 years into the future. All right. And then Derek says, am I familiar with IRC Internal Revenue Code Section 127? Yes, it is. Yes, I am. Yes, I am. And that basically allows you to, shout out to the technology and everything like that. As a refresher, I went into my AI tool, and basically this is going to be more on the ability to provide tax-free educational assistance to your employees, not yourself, but your employees, up to $5,250 of paying their tuition, right? And so, yeah, long story short is that yes, I am familiar with it, and that relates to college tuition, being able to write off your college tuition expenses that you provide to your employees as employee benefits. All right. George says, does your company do the annual QuickBooks reconciliation process to close the books as a service? That is known as bookkeeping, George. That is known as bookkeeping. Yes, we do offer bookkeeping services for sure. All right. And let's see here. Yeah, any other questions? I mean, you've asked some great questions so far today, team. And my advice to you, if you want to take something offline, or if you feel that you're ready to get help, professional help with the taxes, something that's so complicated, so complex, please feel free to use the link that's in the chat. Ivy, from the 7 Ways to Wealth team was able to put a link in the chat, and we can basically, it just takes you 1 or 2 minutes. And then once you fill it out, our team will reach back out to you to, basically to engage in a discussion, not necessarily a service, but a discussion to see if it makes sense for us to work together. All right. Go ahead, Stuart. You have your hand raised, please.
Hey, Jeff. In my I'm in the industry of doing multifamily real estate. So are you guys like real familiar with all of that and with best ways to utilize like the bonus depreciation they talking about now and all that, all that kind of stuff that come with it?
Yeah, that's a great question, Stuart. Short answer is yes, we do. And we do own a real estate investment company known as Badu Investments, where we invest in multifamily apartment buildings, mainly in Northwest Indiana. We do own properties in Chicago, but we're basically parting ways with those properties. We're offloading those properties, right, so that we can focus on our main area of Northwest Indiana. And then currently in the portfolio, we have, 178 rental units. And so 178 rental units. And so to answer your question, we ourselves, right, we always practice what we preach. So we ourselves invest in real estate, and most of our clients, most of our business owner clients are actually real estate investors.
That's cool. I'm glad to hear that, man. I'm actually in Ohio too, so I ain't that far from Northwest Indiana probably. So I probably want to come through and check out some of y'all stuff if if it gets to that. I guess you guys got a separate website and everything for that, I'm sure.
Yes, sir. That's right. That is
Okay.
correct.
Yeah,
Indeed.
for sure.
Sounds good. Thank you for that, Stuart. Man, Connie's asking great questions in the chat. She says, can we talk about the family trust and then the Augusta rule and other strategies for the family trust? So, Connie, is there anything specific you want to get to know about the family trust? I mean, the family trust pays for your family expenses. It's real simple. It pays for your house, your mortgage, pays for your medical expenses. What you want to do in your trust paperwork, you want to make sure you state exactly what your family trust should be paying for, what it does throughout the year. You want to create a budget for your family trust. How much expenses does it spend money on? You file a tax return for your family trust to report the income and expenses of the family trust. And then the income that comes into the family trust is the business trust, right? The profit from the business trust transfers into the family trust bank account. And that's the only income that should be showing on your budget line item at the top and also on your tax return. When we talk about the Augusta rule, glad you brought that up. That is the ability to rent your home from yourself to your business for up to 14 days a year and charge it a daily rental rate, let's say $1,000 per day. And then your business gets to write it off basically 100%. All right. But you, as the owner of the property, don't have to pay any income taxes on that money. All right. So to answer your question, Connie, this would actually go on your business trust tax return because your business is who's renting from you, right? Not your family trust, but your business trust. The family trust just pays for family expenses and owns family assets. That's it, right? The business trust is who handles the day-to-day business affairs of the business things that you do. You own a car dealership, your real estate agent, you own rental properties, you own a farm. The business trust is who basically operates those items. All right. So the Augusta rule, it's a nice tax write-off that allows you to rent your home from yourself to your business for up to 14 days a year, charge the business a daily rental rate, right, that you set yourself. And then your business writes it off, but you don't have to pay any income taxes on the money thanks to the Augusta rule. All right. My advice, please don't try this at home, right? Everything that I've just shared with you today, please don't try this at home on your own. Utilize professionals, utilize experts to help you properly execute these strategies as best as you can. And Connie says, amen. Amen to that, Connie, for sure. All right. Does anybody have any other questions? Amazing questions so far today. You know, beautiful Friday with the questions. You can feel free to unmute yourself to ask, or raise your hand and then unmute yourself to ask your question. Or you can type your question in the Q&A, right, section, chat section. But remember, we do have that link in the chat for anybody who is looking to work together or just have a conversation. You want to take this offline, or you're ready to engage in professional tax services. We'll be more than happy to help you with the tax services that we offer as a CPA firm. All right. And so any other questions, please? Let's do last call for questions going once. All right. Last call for questions going twice. And so to Christina, Yvette, and the team, let's bring back Christina and
Why
let's
does
wrap it
that-
up for the task force.
Listen, Jeff, why does that sound like a threat? I like going once, I'm out of here. It's the weekend. TGIF going twice. Up. That's it. CPA is out of the building. Oh my gosh, Jeff, I adore you. Thank you so much. Listen, everyone needs to come off mute. Please come off mute and say thank you to Jeff. Please, let's show our appreciation.
Thank you, Sir Jeff.
Okay, Jeff
Thank
is
you so much, Jeff.
Thank
Thank you very
Excellent
much, Jeff.
information.
Thank you, Jeff.
As usual.
Thank you,
Yes.
Jeff.
Absolutely. I appreciate it.
This is
Appreciate
Dina.
the love.
Thank you, Jeff.
Jeff, thank you.
Appreciate the love.
127.
Amen to that.
Thank you
Thank you. I
so
appreciate the
much.
love.
Yes, listen, everybody, click the link inside of the chat. Okay, get connected with Jeff and his team. They are professionals. They are
I go
well.
down here. You going down?
All right.
When it
You
comes to trust taxes, okay? So please, 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 like he said, don't try this at home, okay? So you want to be able to do it now. That's why he said they're in the planning phase. They're preparing, right? You want to do it now because most of you guys that are establishing your trust, right? Next year, you're going to be filing taxes. You're going to need a professional, okay? I have never, ever, ever filed my own taxes, and you don't want to file your own taxes. I don't even know how people are able to do that. So you want to be able to consult with Jeff and his team. So click on that link, you guys, okay? Because once again, this is our trusted and vetted resource when it comes to the space. And even Jeff said it himself, right? It like the 1041 is like the most complex thing, or just the tax return is the most complex thing. But majority of CPAs are not familiar with filing for trust. Okay, so you want to go with someone who is experienced. Okay, so thank you so much, Jeff, for being here today, for being that resource, for pouring into the community. We appreciate you each and every time, and we appreciate your dedication to the community every time that you come and educate us. We really, really, really walk away with so much knowledge and information, and now it's up to us to be able to apply it. So go ahead and click the link, get on their calendar, and get the information that you need so that you can head in the right direction, okay? Don't miss this piece of the puzzle. Thank you, Jeff.
Amen to that. Thank you, Christina. Thank you for inviting me. Thank you to your team, 7 Ways to Wealth. And yeah, thank you to everybody for investing in yourself, investing in your education. Always remember that information and knowledge is potential power. Information and knowledge is potential power. What you decide to do with the information is what what creates the power itself. And so part of that, action is clicking that link in the chat, right? Clicking that link in the chat, taking action. This is very important information. Less than 1% of the entire world has access to this, knows what we're talking about. All right. So you just being in a room today, you separate yourself from a lot of people. But what takes you to the next level, What gets you to that next level is taking action and doing the things that you need to, following the steps, the blueprint, and then clicking that link that is in the chat as well. So thank you, Christina, once again for inviting me. It's always a pleasure. It's truly an honor. And I hope everyone has a great rest of the day. Happy Abundant Friday to everybody, and hope you have a great weekend. All right.
Yes,
Thank you.
you too, Jeff. Thank you so much. God bless you. Thank you. You have a good weekend and enjoy the rest of your Friday.
Amen. Thank you, Christina. See you all.
Amen.
Thank you. Thank you.
Bye.
All right.
Right. Well, I know that my cup is full, so I pray that everyone else's cup is full. So we're going to continue on with the Q&A session, you guys. So let me just briefly go over what we went over today. Today, we were focused on asset protection. So we went over how to transfer our real estate into the trust, how to transfer our vehicles into the trust, how to transfer our businesses into the trust. Okay, because last time I checked, those are our three biggest assets or most expensive assets, right? And those are the three things that we do not want to lose, right? So, and then we took an inventory of our assets, and then we went and applied for our EIN for our family trust. So with that being said, I want to open up the floor for Q&A so that I can answer any questions that you guys might have based on what I went over today, which is asset protection. So, any questions for me? You guys can raise your hand, and I will also look inside of the chat. Ray has her hand raised. Hello.
Hi, Christina. Hi, everybody. Um, I have a question about telephone numbers. Someone just mentioned to me, I was talking about the Google Voice, and they're like, well, if you're dealing with asset protection or anonymity, Google Voice is not anonymous. It could always be traced back to you. Do you have any strategies for maybe another way, or if you do not feel that that's a real issue?
Okay, so that's a really good question. And I really do not have an alternative. I would just tell you to do your due diligence. Me personally, I use another company. So like we have our own software where we run our trust through. And so there is another service provider that we use for our virtual phone numbers. So I don't think that I could point you in that direction. So I really don't have like any alternatives. I would just tell you to do your due diligence.
But you do see that, do you see the issue? Because
I
it
do.
was raised to me as a real issue, and they said if there's something else you could do, maybe you ought to think about that if you're really thinking about protecting yourself or keeping yourself out of the mix, not so much the just the uh, just the trust, but yourself. And if you register for that number, it comes back to your telephone number, which is traceable. So that makes sense to you? Okay.
Yeah.
All right. Thank you.
You're welcome. Let me see. Then we have Ken. Then we have Kenya. Hey, Kenya.
Hi, good morning. How are you?
Hi, how are you? Good morning. Good
Uh,
morning.
Good. I have Coco with me today. Uh,
Yeah.
anyway,
Oh, so cute.
yes, a
Wow,
dog
I
hug
love that.
for my niece. Question. So when I transfer my company, so I have a Georgia corporation and I have a California LLC. The California LLC also has DBAs attached to them. When I'm transferring the LLCs, is there something that I need to do with the DBAs to make sure they're all transferred into the trust?
That yes, it is. Yeah, so you have to also go through the DBAs that you've transferred as well. So everything you're going to do through the Secretary of State, but if you are using a DBA, then yeah, you do want to go ahead and retitle that as well.
Okay, so I would go to probably where I got the DBAs from, the Recorder's Court of Orange County, and transfer, instead of me being the owner, transfer it into the business trust.
Yes.
Okay. All right. That's
All right.
it. Thank you.
You're welcome. All right, next we have George.
Hi, Christina.
Hi, how are you, George?
I am awesome. I am awesome. Another great class. Wow.
Ah, awesome. I'm so glad that you was able to make it through the whole week. So this is great.
Yes, yes. So my question is kind of a clarity. Kind of like you mentioned when we talked about the LLCs that they have to be registered with the state. But do the trusts have to be registered with any state?
No, no, it's a private contract. So it doesn't have to be registered and you don't want it to be registered because then that means that you have to disclose the entire contract. So all parts of it. So you don't want that. And it's not required.
Okay, that's what I. Okay, okay, thank you. That's what I was picking up, but I'm like, it's kind of blowing my mind there. But,
Yeah. No, it's a good thing though.
yeah, I guess a beef part of my question. I know Florida is like a full disclosure at one of my LLCs there, but so not even in Florida, just because it's a contract, I don't have to do that. I just put it in my lockbox and disclose where it's located at to the people that need to know, and that's that.
So I cannot really hear you clearly. I feel like the service is just getting a little interrupted. I'm sorry.
I'll just type it.
Okay, I'm so sorry. Okay, so next we're gonna go to Ro. Ramondo, are you available? You're still on mute. Ramondo?
Yeah, Christina?
Hi.
Hey, I don't know why I always have trouble with that microphone. Sorry about
Yeah,
that.
I know. It's okay. How are you, Ro?
I'm doing pretty good. How's Friday going for you?
Friday is going great. I'm excited that it's Friday. Okay.
Cheers to the weekend.
Yes, I'm looking forward to it. I have plans.
Okay, so I think I got two questions.
Yes, sir.
So can an entity be a part of your board or your trust board?
Yes.
Okay. All right. And just to confirm, because I think you made it real clear earlier, but I just want to clarify it. So, on the quick claim deed, the grantor is the owner of the actual property, right?
That is correct. Thank you so much for clarifying that. I appreciate it.
Yeah.
You have no clue like how this really confuses a lot of people. And I'm just so sorry. And it's obviously the same word, but people need to understand these are two different deeds. Your trust is a deed and your quit claim is a deed. So they're not referring to the same grantor.
Okay. Yeah. I thought that was what you were saying. Yeah, that was
Yes,
pretty cool.
sir. You're so correct. You're so correct.
Okay, and now my last question is, so when you running your FBO as a ordained minister and privately, and you have a place where you conduct like church affairs, do you like have to file like any additional paperwork with the IRS for doing that?
For conducting your own affairs. Those are your documents and they're private. So you want to keep proper documentation just in case, right? So you need to be able to document that stuff, but you don't have to submit it if you're an FBO. If you're like a traditional nonprofit, then you do.
Got you. Okay. All right. Thank you very much.
You're welcome. Next, we have Stuart. Hey, Stuart.
Hey,
To the
Christina, how
what?
you doing?
I'm
All right.
well. How are you?
I'm
Look
doing
at
pretty good.
Ariel. What's up with the food?
Somebody else
Oh, so sorry. Hold on one second. Okay, there we go.
Okay. Yeah, I just want to say, like I told you the other day, I'm glad I finally got my trust set up. When I looked at it, it was a year, the time that had lapsed in between since the last time I looked at it. So, I had a life event that had happened, and I had to kind of take action quickly. So, I'm kind of glad that that did happen. I did go to
Congrats.
Truist. Like, yeah,
Congratulations, Stuart.
thank you so much. It's all due to you. I appreciate this good teaching that you're giving here. Appreciate it.
Oh, thank you. That means a lot to me.
Absolutely. Yep. So what I wanted to say though, so it did go
Sure.
good with I developed a good relationship with a banker that was real familiar with trust at a Truist near me. So set up all three of my accounts. What I wanted to recommend to the other wealthy trustees is that like I know the lady was talking about the Google Voice number. Like I'm concerned about that too. So but I am using it right now. But the way I went about it when I set up my accounts was that I told them that I did not want mobile banking, and I told them that I did not have an email address for any of my entities, and I'll be doing all my business face to face, So doing it like the old school people that don't want to use the technology, but I just was worried about the mobile producing some type of public record, you know what I'm saying? So I was just like, yeah, I don't want to use the email, none of that. So even though I am using the Google Voice number, it's not in the public at all. So that is a strategy around what your concern was, whoever that was speaking earlier.
Yeah.
But
Thank you.
oh yeah, go ahead, Ms. Christina.
No, I said thank you. Thank you for that, honestly, because like we learn a lot during the process when we go to, when we start operating as a trustee, just gaining that experience. So the fact that you went to the bank, the fact that you opened up your accounts, the fact that you already know what type of documents is needed and things of that nature is allowing you to share with your community members that haven't gone through that process. So I just want to say thank you so much, Stuart, for just I want everyone to be a resource to each other because, like, some of you guys have been in the community for 4 years, 3 years, 2 years, last year, right? And
Right.
compared to those of us, which there are new community members that are on this workshop, right? That are brand new. They've been in the community for one day. So
Absolutely.
thank you, Stuart. Thank you.
Yes, man. What I was gonna say too. So I was surprised that she didn't even. I had to make that amendment to my certificate of trust, like you had told me. So I did that, and she didn't even take a picture of it, like scan it, like for any of the entities. Like, and I don't know if it was because I was confident in the way that I was giving her the answers and everything. Like I knew I basically was answering. She was asking me some questions and everything, and I was able. She said to bring the whole trust, but I told her that I was not comfortable sharing it, and all that. She was like, "Yeah, you don't have to share it. Just bring it, just in case if we needed to answer any questions and all that." So just to give you guys some tips, like I said, they might not even ask to scan your certificate of trust, but because I had a mistake on the address on mine, so I was real worried about it. It was a whole panic thing, whatever. But I was able to get that done. I just got one question for you, Miss Christine. I know
Yeah.
that it is slightly related to the ministry trust, but it was something that concerned me because I had asked them at the bank. I didn't ask her about a ministry trust. I didn't use that language. It was about that on the ministry trust. It requires two signatures to do a withdrawal in the contract.
Mm-hmm.
So I had asked her about that, and she said, "Well, we can't make you have two signatures type thing. You know what I'm saying? Like you can still come in and withdraw by yourself. So that's violating the contract, right?"
Because you're the only one. So in that section, it's referring to if the withdrawals are going to be initiated from the treasury.
What would be the difference? Like that would be a different account than the typical operating account, like the main checking account I use for most business. Is another account or something?
No. Just typically money is maintained by the treasurer of the organization. And so if the treasurer is doing it, then it's going to be the treasurer and you.
Right, but if okay, because right now I've only appointed a field director, so
Okay.
I still got two spots that I need to fill. I'm trying to find the right people. This is like chess. You got to go through like your whole Rolodex and really like consider who you gonna make that position, and then you got to trust them because they can kick your butt out of the ministry trust. So I was, but as far as like that issue that I was addressing directly, like if I did like I guess like some checklists that was kept, And then like if I tell them like, and then I guess document it during the board meeting and say, hey, like, you know, me and the treasurer had discussed it. You know, I'm going to grab 10,000 out of the account or whatever. We both signed a checklist, you know, or something like that.
Yeah, that's fine. So whatever policies and procedures that you want to adopt, you can just have a board meeting about it. So if you feel like it's best to not have it in that section, then, and if you don't even want to give the treasurer banking privileges, you don't have to.
Okay, so do I have to change the contract, like make an amendment to the trust, or is it just like discretionary?
So you wouldn't, so one, yes. So if it's already executed, then you would do an amendment to that section. Another thing is that if you have any updates, it's going to be in a board meeting. So for example, yesterday we went through the banking trust board meeting, and in there, I told you guys to specify if you want it to be singly or jointly. So that is where you're going to specify if it's going to require one signature or two. So we
Oh,
have a
okay. I put singly. Yeah, I put singly. So I don't have to have, even though the contracts say that, I still don't have to have the treasurer sign. Like if I need to go
correct.
make moves, I don't have to. Okay, good, good.
Yeah, so
Okay.
you're going by that board meeting because that's the latest resolution to, to that issue, right? What's the issue? Well, who's going to be signing for the banks?
Right. Okay. So yeah, I already got that documented too. Okay, so I'm in good shape. All right. Yeah, I appreciate it, Miss
Mhm.
Christina.
You're welcome. You're welcome. Thank you so much.
Thank
So one thing I was going to add is when it comes to these banks, right? Some of them, they have their own certificate. So like Truist, I don't know if you signed their certificate of trust, because that's one thing, right? So Truist has a certificate of trust. So instead of them taking yours, and like scanning it and uploading it, they will just have you fill out there. So that's one. Another one is Fidelity, right? Fidelity, they have their own certificate of trust so that you don't have to necessarily upload your certificate to Fidelity. You'll just fill out theirs and then it'll be compliant with whatever their guidelines is. Now, what I have seen is that if there's anything missing when you set up your account, they will come back and ask you for it. So I have seen where some community members, where the banks will ask them for the entire trust document, not, I don't think it was Truist, it was other banks, but they will ask you, like Wells Fargo and all those other banks. They will ask you for the entire trust documents, or they'll ask you for their certificate, or they'll ask you for something that's missing. And they're like, hey, if you don't provide this within 30 days, then we're shutting down your account. So just be mindful of that as well. So there's like a lot of little things that might occur when you are really trying to like open up these banks, these accounts, these trust accounts with these various different financial institutions. But I just wanted you guys to be aware of that. Now, me personally, I would not open up a trust account with Chase Bank, Wells Fargo, or Bank of America just because they ask you for the entire trust agreement. And you need to be able to put yourself in a position to let them know, hey, you're violating privacy rights. Like, I'm not going to disclose the trust agreement because it's not required, but it's their policy, right? So that's just something I wanted to share as well. Let me see if there's any other questions. There are some questions in the chat, so let me just dive into the chat. Let me see, what is this? And okay, so someone was asking about the iPostal that they bought. Okay, so it's Connie. Hey, Connie. With the iPostal, bought 3 mailbox suites at the same street address. Is that okay? Yeah, that's okay for you to have the same address and a different suite number. And then who is the community contact for the IULs? I can't find the workshop I attended over a year ago. So we have our own insurance department when it comes to the insurance. So for those of you guys who need IUL policies or interested in insurance, it's going to be me and my team that are going to assist you. So I am licensed to assist you. Yesterday, I introduced you guys to Keon, so he is also going to be assisting you. And there's other members of my team that are also going to assist, okay? So if you're able to fill out that insurance intake form, I would really appreciate you because a member of my team is going to be in contact, okay? And the next question is about the quitclaim deed. So can we do the quitclaim deed for transferring ownership for a timeshare? Okay, that's wonderful. So with the timeshare, and you said to the ministry or to another trust. Okay, when it comes to you transferring real estate to a ministry trust, you have to keep in mind that property should have some type of nonprofit activity if you're going to put it into the ministry, right? So if it's not utilized for nonprofit activity, then there should be no reason why you are adding it into that type of trust. Now, with a timeshare, it would be best that you would put it into a family trust or even a business trust. So I'm not sure what you utilize it for. I guess you utilize it for the period of time that you go to stay at that property. So as far as transferring ownership, if you have a deed to that property, I'm not really familiar with timeshare, like how they provide you. I don't know if it's a certificate that they give you. So if you're able to come off mute and let me know, but whatever ownership interest that you have in that timeshare, you are able to transfer it into the trust. I believe that Hilton said they needed to prepare the documents, right? So sometimes there are, like the companies, they are going to have to provide you with various different documentations in order for you to let them know that you want to transfer the ownership. So if that's something that Hilton does, where they have to prepare the documents for you, then that is a part of their policies and procedures. So you're going to obviously have to go through them. So yeah, you would have to go through them. Let me see. So for the quitclaim deed template, it has the word trustee or trust, not grantor or grantee. Is that okay? Or should I change it to grantor grantee? So it has trustee. So when your quitclaim deed, when it's referring to the trustee, is it referring to the trustee of the trust? And this template that you got, did you get it specifically from the county where the property is? So is it okay for documents that are notarized over a year ago? So it's okay. So even though if it was notarized over a year ago, you can still record it. I couldn't find the recording where it was prepared last year. And copy the trust. I have not filed it yet. Yeah, so if you have the document and it's already notarized, then all you have to do is record it. So everything is still, it's still, like it's still accurate, so you can still record it. Sorry. So should we start an LLC in the business trust name? No, you should not. So the business trust is going to serve as the owner of the LLC. So if you don't have an LLC, it's not required for you to be able to operate your business trust. So you can operate your business trust if you have like a traditional business that you would like to, establish. The registered agent should be a third party. So like for your LLCs and your corporations, the registered agent should be a third party. So let's see what other questions that you guys might have. 1 second. I want to purchase a quadplex, but I would like the information for the program that will help me purchase without paying. Without me paying all. Okay. So on Tuesday, we are going to have a master class where we're going to talk about the funding that you need for the trust, and that funding you can use for real estate. So that's where you want to begin when you are trying to acquire the funds that you need for the trust to acquire the assets that you want to acquire. So as far as so the question is, we just keep our trust agreement in a lockbox or a safe to ensure that the right people have access and that they have our asset list that we created today. Wonderful question. So when we are documenting everything for our trust, we want to house it in a folder. And in this folder, we have several different sections. So one section is for our indenture. The second section is for all of our amendments. And the third one is for our meeting minutes. And then all of our contracts, and then we will have a separate section for our deeds and our titles, and then lastly for our liabilities. So all of the expenses, the profit and losses, or all of the bills that are associated with the trust operating cost. So within that binder, you want to store it in a safe. And then that safe is going to be located wherever you're conducting trust business. Obviously, the safe is going to have either a code or a key. So whatever safe that you decide to buy. Okay. So mine has a 4-digit code. Now that's just one location. When you are executing your trust, best practice is for you to execute 2 copies. And these are 2 original copies that you're going to keep in 2 separate locations. So now the second location is going to be in a safety deposit box or in a safe in a second location, right? So just as long as it's safe, right? And that could also be located, at a board member's house or a co-trustee's house or wherever the other people are that are assisting you with operating the trust. So just keep that in mind. And your asset inventory list, which is what you're referring to, is a part of where you are going to keep your trust documents. So it's not the indenture, but it is a document that you're going to house in the same location. So I hope that helped. And let me see. If you use RA services, they offer virtual numbers as well as virtual addresses. That's wonderful information. Thank you so much, Kenya. So a lot of those companies, they do offer a lot of things that entities need when they're like just starting up. So the addresses, phone numbers, that's wonderful. So the certificate of trust is 2 to 3 pages. That's a wonderful question, Ray. The certificate of trust for the family trust is 2 pages, and I believe for the business trust is excuse me. The business trust and the family trust is 3 pages. So the first page is the notarized page, and then the second and third page is the Schedule A, where you can find the trustee powers. Now, the certificate of trust for the tax exempt nonprofit organization is probably about 8 to 9 pages. So the first page is the certificate, and then the remaining succeeding pages are the trustee powers. So there's like 7 pages, I believe, that account for the trustee powers. So Ray, do you have any other questions?
I just wanted to ask that in case you couldn't get to me on the chat. I I think I wanted to know if the Schedule A had to be a part of that, or do you give the
It is.
bank only so you give them the certificate, the notarized certificate, and the Schedule A.
The Schedule A of the certificate. So hold on, let me just pull it up, okay? Because I don't want you to be confused, okay? So just give me a moment. I'm gonna pull up a trust that we did yesterday, okay? Not yesterday, but on Monday. Just give me a moment, okay?
All right.
Thank you. Okay, Ray, let me know if you're able to see my screen.
Yes, okay.
Okay, wonderful. So when we set up the certificate of trust yesterday, this is a certificate of trust, right? So this is page 1 of the certificate of trust.
Okay.
And then we go to page 2. So you see at the very top, it says certificate of trust, and then it says Schedule A. This is the Schedule A of the certificate.
Okay.
And the Schedule A only has the trustee powers. And the trustee powers, because it's lengthy, the trustee powers is 2 pages long. So the Schedule A is 2 pages long. So in totality, your certificate is 3 pages.
Okay. I just wanted to be sure of what to actually give to the
Bring.
bank, or what they're required rather than what they want.
Yeah, absolutely. So bring them the certificate now. I'm glad that you are asking that question, because that's a really good question. So let me quickly show you. If you do not have, let's go back there real quick, okay? So if you don't have your certificate, or if they don't accept your certificate, then you can fill out their certificate. So let me show you. This is my brokerage, and they have their own certificate, right? So do you see what it says here?
Mm-hmm.
Are you familiar
Okay.
with Fidelity?
Mm-hmm. A little.
Okay.
My daughter does Fidelity, yeah.
Okay, yeah, I do too. I've been with them for decades. So, now Fidelity will have you sign their certificate.
Mm-hmm.
Some other banks, they have their own certificate. I know Truist is one of them, because I went and signed when I set up the trust accounts at Truist, I filled out their certificate.
Is there anything on their certificates that you shouldn't give them?
No, there's nothing on
Okay.
there.
Okay.
Yeah.
Thank you,
So
Christina.
you're welcome, Ray. You're welcome. I'm so sorry. My throat is getting a little dry here. I'm trying to stay hydrated. All right. So thank you, Ray. I appreciate you so much. And we're gonna now move on to Andres. Hey, Andres, how are you?
Hi, Christina. Doing well.
Hey,
I missed a lot of it, but I wanted to chime in. I was listening to the question and answer, which has been great, and I thought of a few questions, so I'll make them short. Did we,
absolutely. Thank you for being here, Andres. I always love to see you in the workshops.
Thank you.
Hey.
I had a thought. If I have a business and I run it out of a property that's in my name, so what I was thinking was set up a business trust, and I don't know if it would be the actual business trust that has other entities into it, or just a business trust to put the property into, and then have the three properties, or I'm sorry, the three trusts we've been talking about, have the address there just under different suites after the trust is set up. That way I'm not paying postal one, and I don't live here, it's a commercial address.
Oh,
Um,
is there legitimately more than one suite?
there's a house. I mean, so there's four rooms and, living room and an office and everything. I mean, so one could be the office, one could be the inside office, one could be the room, one
No,
could be
no. So you're telling me that it's a house address, but if you go to open up the bank account, you're gonna tell the bank Suite 2A, but there's really no existence of Suite 2A?
I would just have suite one. I would make them myself. I mean, do I have some legal requirement to notify somebody I'm creating suites inside my house? I mean, it's not even a house. I don't live here.
So,
This
so,
is
so, well, so the address has to be like recognized like with the USPS, right? So,
it is,
um,
but not the suites. But I mean,
right, that's what I'm saying.
I've
It's the
sent
suite
other mail here to like suite one, and it gets here fine. Because I
does.
have a private trust through. I mean, and that I'd set up before this, and the mail comes to suite one.
It does.
It just
Oh,
goes in the mailbox. You know what I mean? It just goes in the mailbox.
listen, Andres, I'm gonna tell you, you guys are creative, okay? Like I like I feel like if you've had success and that is what you would want to do, then go for it. I just don't want your mail to get rejected because the address doesn't exist because they're not able to deliver to suite 2 or suite 3. So, but you sound like you've had success with the process already.
Yeah, but not even. I'll send a couple letters from somewhere else to suite two and four and see what happens. Um, if that works, and I'm confident, would that work though? Because then it wouldn't be if there was a trust that owns the land, right, or whatever the property is. If the property's in the name, and then the other, let's just say I do the three trusts: the business trust, the family trust, and the faith-based organization, just as different suites. Then I know that they could look up previous ownership and see my name, but is there any conflict in doing that?
I don't think so. I think that that would be fine.
Okay, I'll
Yeah.
look into it. Otherwise, yeah. So then
It
yeah,
sounds creative, and I want you to be our resource and let us know if it works.
I will. The other
Thank you.
question is just a simple one. If the first trustee's mother is the grantor, could there be a conflict there?
No, so just that individual cannot be like subservient or subordinate. And just make sure that inside of the trust documents, it doesn't say that they can't be related. So I know that like the family trust is fine, the business trust is fine.
Okay. Faith-based
Uh,
organization. Is there an issue with that one?
no, so the only restrictions when it comes to the faith base is board members being related. So the maximum is 2.
Board member. Okay. All right. Um, I'll try that. Thank you, Christina. That was it.
You're welcome, Andres. All right, let's see. So the next question is, how do we sign the trust? How do we sign as a trust? So that's a wonderful question, Cornelius. So you're not signing as a trust, you're signing as a trustee, okay? And so when you're signing as a trustee, you are going to provide whatever signature it is that you have, but then you're going to place your title at the end of the signature, and you're signing as that authorized representative of the trust, right? As the fiduciary. So your title is TTEE, that's abbreviated, that's the abbreviated version like CEO, right? Now you can write out the whole word trustee, or you can write out as trustee of, and then you can put the name of the trust. So those are the three ways that you're able to sign as a trustee of a trust. So that's what you're going to do at the bank. That's what you're going to do whenever you're doing any type of transactions for the trust. So the bill of sales, all of these things. So I said, thank you for answering a million questions. I love it. Uh-huh. Okay, so you're saying that ChatGPT said that the deed template didn't protect the homestead exemption and is not suggested for a homestead affidavit. Okay, so when it comes to your homestead exemption, the first thing that you need to be aware of is that it is specific to the county, okay? Now, can you maintain your homestead exemption? Yes, absolutely. Now, most counties, they will have you sign an extra form, which is an affidavit, a homestead affidavit, saying that property is still your homestead. That property is still your primary residence where you live, so that you can continue to qualify for the homestead, even though the property belongs to a trust now. So it depends on the county. Now, you do have some counties that are more challenging, and they're like, no, you can't maintain your homestead exemption because the home is not in your name, it's in a trust. So that depends on your county, okay? So what I would tell you to do is contact your county. That's what I told you at the beginning of the training. So one, visit the county website because they have so much information on their website, and they also have all of those forms available. So the homestead affidavit is available on the county's website. Do you create a separate family trust for a vehicle? Yes. Are there any banks that do not require a grantor's permission to open up the account? There, so I personally haven't encountered any banks that do not require the grantor's information.
I have everything, so that's
I will tell you that we do have community members that have been able to open up the account without the grantor's information. That was in my process. That was just what the community members have shared with me. So, once again, do your research and your due diligence. Every single bank is different. These are the smaller local banks, right? Your smaller local banks and credit unions, they will be very flexible with you. They will be very lenient with you, and I have seen it to where they'll open up an account, without the grantor's information, but then they'll come back later and say, hey, in order for this account to remain open, we need the grantor's information. So there's various different ways that this can go, and it's because not every single bank is the same. So Wells Fargo, Bank of America, all those banks, they do things differently. So the next question is, can you repeat how we sign as a trustee? Wonderful. So you're going to place your signature, and the first way is that you're just going to put the abbreviation of the word trustee, the title. So the abbreviation is TTEE. So I just want you to know, like in your mind, think of like CEO, right? So CEO is an abbreviation, right? So TTEE is an abbreviation, okay? The second way is for you to write out the entire word or title, trustee. And then the third way is for you to write out the words as trustee of, and then you name the trust, right? So as trustee of June Holdings. So the next question is, I was able to open one without the grantor, but I had a power of attorney from the grantor. Wonderful. You see? So that is, yeah. So sometimes it is going to take you being a little bit creative, or you just having that established banking relationship too, because I think other community members have told me, well, I've been, dealing with this bank and this banker for a while, and they asked and I said no, and they just proceeded with opening my account, right? So is it possible? Yes. Have I experienced it? No. Have other community members experienced it? Yes. So should you try? Yes, you should try. So a lot of the stuff that you're going to learn as a trustee, you're going to learn as you go, right? So let's see what is next. And so someone said, I wish I had a POA. But the POA had specifically list open bank accounts as authority. That's beautiful. Thank you for everything. It has been helpful, and I'm logging off now. Okay, Dr. Marcia. So thank you for being here. It's always a pleasure to see you, my dear. God bless you, and have a great weekend. So next we have, the next question is, what are the other things that you could put into the trust with the vehicle? Nothing. So let that be the only asset that you're placing into that trust. So you just want to create a trust solely for the vehicle, and that should be the only asset there. Now, what I will tell you is that you can put multiple vehicles in there if you would like, and it depends on how much risk or liability that you want to take. So I'm just going to give an example of one of our community members, right? One of our community members has 4 vehicles, right? And so it's him, his spouse, and his 2 children. So he decided to set up 3 trusts for the vehicles. So him and his spouse both of their vehicles are in one trust. And then his 2 children, each of them have their own vehicle trust. So he doesn't trust his children's vehicles to be in the same trust as his vehicle or his spouse's vehicle. So their 2 vehicles are isolated, and him and his spouse, their vehicles are the same because they're safe drivers. So it depends on the liability, what's the liability that you want to take, and, the real risk involved. So just be mindful of that. All right, so any other final questions? So the vehicles are in the family or in the business? That's a wonderful question. Or under the LLC owned by the business trust. So the vehicle, is it for personal use? If it is, then you would put it in a family trust. Is it for business use? If it is, then you would put it under a business trust. All right, next question is Connie. So with Apex Insurance training, what is a full-time dedicated agent expectation? That is wonderful. So are you licensed already, Connie? She said, LOL, full-time. No, okay. So Initially, the expectation is for you to get licensed within 3 to 5 days, and we show you how to do that, leveraging AI. So everything that we do, we leverage AI. So we're very heavily technology based. So for example, I got my license in 2 days. So it was a total of three. So I signed up on Monday and I went and took the state test on Wednesday, right? And that is through leveraging AI to help me study to go take the state exam. So if you are willing and able, then that is the expectation. And then after that, you get to create your own schedule. So we provide you with the leads and you are able to create your own, your own calendar, your own schedule of when you want to work with our clients and, your clients. So it's not really, it's like we are not like telling you how to run it. We're just providing you with the training. Now, as far as the training goes, we do trainings almost every day. And then we have evening trainings on Wednesdays, and then we even do trainings on Saturdays. So as far as the training go, you are able to come in. So usually they're around like 10 o'clock, sometimes 12 in the afternoon. So we have a schedule when it comes to the training that is available. So basically you get to create your own schedule, right? This is your own business in a box, right? Where you're able to, you're a licensed professional and we provide you with the people that you are here to help. And from there, you're able to work the business, leveraging the system and tools that we have. And I'm not sure if you've seen that we have a lot of systems in place. We have a lot of tools in place. We leverage a lot of technology. So you are able to do things faster, better, easier, more efficient. And we're super big on documentation. So yeah, we just want you to be able to have success, but have it in, a short period of time and for you to also be efficient in what you do. So somebody asked, what is Apex? So it is our insurance department. So thank you for asking that question, Diana. So I haven't had the privilege of really telling you guys, but I am licensed now when it comes to life insurance. So I got licensed like maybe a month or two ago. I can't remember because I travel so much, so there's a lot going on at one time. But I'm building out an entire life insurance department so that me and my team are able to help facilitate everything that you guys need. Because what I found is that we do things different than other agents. And the reason being is because we want you to utilize your policies to build wealth. And we want to structure it a specific kind of way. And that specific way is for you to actually accumulate more cash value and for you to have like a lower death benefit and high cash value. But as I mentioned yesterday, right, we want to structure it to where it's protected, to where the trust, specifically the family trust, is the one that owns your policy, the one that is a payer of the premium, and the one that is the beneficiary. So I don't think you were on the call, Diana, but yesterday I showed you guys that that my family trust has many people, but I showed just one, obviously, person that is the insured, but the family trust is titled as the owner, the payer, and the beneficiary. And so that's how we want you to be structured. And obviously, other companies are not doing it like this, other agents are not doing it like this. And so we want to be able to help you guys so that we can streamline everything in-house. And so that's why we decided to build out an entire life insurance department. And so that's what we're doing. So we have we have Apex, which is the department. So would it be considered captive? No, it's not captive. So that is what's happening right now. So it's just like the latest and greatest. And you guys are going to get more information on it, but we have provided like the links inside of the chat so that you guys can just get more information. So let's see here. Dina said, congratulations. Thank you, Miss Dina. I appreciate you so much. I missed yesterday, but have time to catch up. So that's why the workshops are recorded so that you guys are able to watch it. But hold on one second. What I'm going to do is I'm going to put the replay for that section on the life insurance. I'm going to put that in the chat right now. So just give me 2 seconds to put that in the chat. Let's see here. Okay, there it is. It's in the chat. So that is where I showed you guys. My family trust, like how the insured are other people, right? So your trust can insure other people, but those other people, they have to have a position in the trust, right? So I'm not the insured, but I'm the trustee. And so I have full control over that IUL policy, right? So anyways, let's see here. Sam, you have a question? Samuel has a question, and I think we are going to be done for today. I don't see any more questions.
Did you see it in the chat or should I just repeat it out loud?
No, I don't think I saw it. Did I miss it?
No worries. I'll repeat it. So just wanted to confirm that the business trust creates and then the business trust literally goes out and creates the LLC versus an individual creating the LLC and then moving it over to the trust.
That is correct. Yes. So the business trust is the one that's going to establish the LLC. So when you're doing the articles of organization, it's going to be through the business trust. The business trust is going to do it.
Okay.
Absolutely. That was a great question. Yay. All right. So next we have Cornelius.
Hi, Christine. Can you hear me okay?
Yeah, perfectly. I like that name, Cornelius. It's very
Oh,
like
thank you. Biblical, right?
Cornelius. Yeah, not a lot of people are called Cornelius because I barely hear that name.
That's why I like it too.
Yeah,
Sorry
it's
for
rare.
not having my
Yeah, it's
I'm sorry for
rare.
not having my camera on though. I'm thinking
No.
behind I'm thinking behind something. I'm at work.
Oh, yes,
But
okay. I understand. You know, I used to do the workshops in the evenings because people were working. I used to do the workshops. When we first started doing the workshops, we was doing it from 7 to 9.
yeah. I have to apologize too because I keep jumping on and off your work. So I'm like, oh, I know she's getting tired of me.
Oh, no,
I'll
no,
be
no,
at
no,
work most
never.
of the time.
Never. I'm used to it.
But I want to see if I get your advice on something because I'm doing a rental car company and I would like
Oh,
to have
nice.
maybe 1 or 2 cars in a trust.
Yeah.
But how would that set up? Like I have the trust, I set up the trust and put a car in it, and then would I have the LLC? How would I set that up? Because I got an LLC for the rental car company, but I haven't yet made my business trust the owner yet. But then when it comes to each vehicle, I think it'd be wise to have it in at least one or two in a different trust. How do I
Absolutely.
set that up?
Yeah, so you want, now my question to you is, are these vehicles paid off?
They would be. It'll be cash
They will?
paid vehicle.
Oh,
Yes.
oh, okay, good,
Yes.
good, good. Okay, perfect. So you want to do actually one business trust per vehicle. Just imagine, especially if it's a rental company, that is high liability, like extremely high liability. And the likelihood of a lawsuit is like overnight. Yeah, from one day to the next. So,
Okay. And yeah.
mhm.
Okay.
So
Will my LLC own those? Because I already got an LLC set up. So
yeah, okay. So the
how would that
LLC is,
connect?
oh, absolutely. So the LLC is going to be the one that is renting out the vehicles. So the LLC is the rental company. It's renting out the vehicles to the clients or the customers, right? So the LLC is the one that
Right.
has the service. It's providing the service, right? Now, those vehicles don't have to be owned by the LLC. The LLC is the one that's providing the service. Those vehicles are going to be owned by their own individual business trust, and then you're going to have a separate business trust that doesn't have any vehicles in it that is going to hold the LLC. So if we're just talking about you having a fleet with two vehicles, that's going to be three business trusts and one LLC. That's four entities. And because it's a high liability business.
I would just probably write a partner agreement that hey, my trust is loaning the LLC the vehicles so he could do its big business without the vehicle. I say that
Yeah,
correctly?
yeah, and you
I
want
write an
to,
agreement, put
yes, you want to
agreement in
have an agreement.
writing.
Correct, yeah.
Okay.
And then you also want to have it spelled out very clearly in your operating agreement for that LLC.
Okay. Because I'm planning, yeah, because I'd be just like a joint venture. Yeah, I don't know if you heard of that. Like some some rental companies, if you had a vehicle and you just lend it to me to rent out, we'll create a joint venture type contract. So that's no problem. That'd be great. Thank you so much.
You're welcome, Cornelius. Thank you. Appreciate you. All right. And let's see. Okay, so
Christina? Oh,
yeah, yeah.
no, it's Diana.
Oh,
I was
hi,
just
hi, hi,
wondering.
beautiful. Hi, beautiful. How are you?
Let me put the camera on so you can so I can talk to you.
She wants
Um,
to show off her beautiful face. Hey, Diana.
uh,
How are you?
so good. How are you doing?
Wonderful. I'm ready to start my Friday.
I know. We need to get you going. But I just had a question. I know this was the first time it popped up with the life insurance thing, and I was like, whoa, because that had my interest, like doing the what do you call it? The banking, the type of
Yeah.
um using life insurance as the banker. Is
Yes,
that
exactly.
that what you
Mhm.
strategic teach other clients?
Yes, exactly. Yeah. So we're gonna have trainings on it, teaching about the private money banking model with the life insurance, with the cash value life insurance. So those trainings are coming soon. So do not worry. Because what I want is I want to be able to show you guys step by step how to do it, right? So I have been doing it for over 5 years. And I want to show you guys the right way of doing it. But it's going to require that you obviously have the right policy, right? It's going to require that the policy is properly structured, and it's going to require that your trust is obviously involved, right? So that means that your trust needs to be fully operational, and that your policy owner is the trust, the policy beneficiary is the trust, and that the trust is the one that's paying the premiums, because that money is going to go from your trust fund into the policy, things like that, right? So,
Yeah.
so it's going to require all of these steps to be made. And so that's why I decided that it was in the best interest of the community for me to get licensed and for me to build out all of the training involved, because I talk about it and I do it, but I don't show you guys step by step. And so now that I've showed you everything step by step, I feel like it's my responsibility to show you step by step how to do it with the life insurance as well. And so that's what me and my team are implementing. So we're building out not only an entire insurance department, but also all of the training. So it's going to be robust training that we're going to have for you guys, just because it's important. It's important, and we want to show you just like these workshops. So it's going to be just like a workshop style setting. And then we'll have like the recordings available and stuff. So these are things that we have coming soon. We're very intentional because we just want to be able to, to one, be that resource, but also for you to, like, we want to hold you accountable to say, hey, you're actually using your policy to build wealth. You're actually doing it the right way. The owner, the payer, and the beneficiary is assigned to the trust, right? Because I don't have, like, I'm telling you, hey, do it that way, but you guys are going out and figuring it out on your own. And then what I've seen is that it's not done right. And so it's frustrating me. So I'm like, okay, no, 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 no. Like, one, let me get licensed. Two, let me train my team appropriately so that we can actually help you do it right. So that's what we're working on right now. It's something that that you guys are asking for, and we're like, okay, we'll deliver.
Now, does that work in New York? Because I know there's challenges in New York.
Yeah, I know there are a lot of challenges in New York. To be honest, I cannot really answer that question. I don't know. And I would say that also it depends on the carrier. So it's not that you can't do it. And what I have seen too is that a lot of individuals that live in New York, they wait
Go to
until
New
they
Jersey.
yeah, they wait until they move, or they do the New Jersey thing. So I've seen it, I've heard it, but we've had people, they're like, okay, well, don't worry, I'm moving to North Carolina, so in 2 months I'll get it going, or they have to cross the bridge to New Jersey. So yeah. So I'm not saying that you cannot do it. I'm just saying that like you're aware that there are challenges. So
Did you
yeah.
hear
So
security to
say that
get security? I think cover New Jersey. There's
oh,
different companies, right?
I'm
Do you hear
sorry.
me?
No, can you say it? Can you say it one more time?
Do you the company? I think it's called Security. Security? Something.
Security? Okay, what is that? Is that a
A life insurance company?
okay.
I think it's a life insurance company. I gotta check into it.
Okay. I'm not.
But which one do you deal with?
Oh, so
Is there
yeah, so it's multiple different carriers. So it's multiple different carriers that we deal with, like UHL, Emeritus, Ethos. There's like a lot of them. So there's dozens actually. Did we lose you? Diana, are you there? We lost Diana. I don't see her. All right. Let me just check the chat. If not, we are going to wrap up the workshop. Let me see here. So, my kids have their own insurance policy. Can we add their policy to the family trust? Yes. So, congratulations for your children having their policy. That is the right thing to do if we are parents. So, I'm glad that they do. Now, your children, I don't know if they're minors or if they're adults, but what would need to happen is the owner will have to go ahead and contact the carrier and fill out the appropriate paperwork in order to place that policy into the trust. Now, I would tell you that they would want to update their policy to where the children are the insured. And then once again, the family trust is the owner, the payer, and the beneficiary. So that is what we found that is best practice. In order for you to really utilize it. So that's all that they have to do. So it's just a couple of, pages. So they'll go ahead and fill it out, send it back to the carrier. The carrier will take its time to process it. So what I've seen as far as processing time has been like 10 days, 2 weeks, something like that. So once again, it depends on the carrier. So they will let you know what their usual processing time is in order to update that information. So without further ado, I want to tell you guys what the homework is. So obviously you guys have homework. Now, we have gone through the entire workshop, which we have gone through a lot, right? And um, in this workshop, you guys learn how to set up your three trusts, which is the business trust, the family trust, and the tax exempt nonprofit trust. You have learned about banking procedures and operations, how to apply for your EINs. We talked about the life insurance policies. We talked about asset protection, how to transfer your house, your vehicles, and your businesses into the trust, how to take an inventory of your assets. And then we had educators come in and teach about like the trust taxes. So we would like to know, how has your experience been? So in your email, in your inbox, you are going to have a survey. And if you can take some time to fill out the survey, we would really appreciate that, because the survey is where we're able to gather the information that you guys are asking for, right? The survey is where we're able to improve our processes, because at the end of the day, you are the one that's having the experience for the workshop. So that's one piece of your homework. The other piece of your homework is for you to be able to book that call with Jeff Badu and his team, because I want you to be able to get the ball rolling and to just establish that relationship is very, very, very important. The last thing I want to do is I want to see if there's anybody that wants to come off mute and just let us know what their experience has been during the workshop. So you guys, if you want to come on camera, that's great. If you don't, that's fine. But if you want to come off mute and just overall tell us, how has your experience been, especially those of you guys that it is your first time doing a workshop. So is there anybody who wants to come and say a few words? Cornelia said Jeff is great.
I can say something.
Go for it, Miss Kenya.
I think it was amazing. I think it is powerful information, a little overwhelming, but in spite of the fact that it's some new information and it's overwhelming, I feel like your expertise, your delivery, the way you communicate, the way you're so patient with everyone makes me hopeful and confident in knowing that I'll get it done. Because it's a lot of things that we have to do. You can give us information, but we have to do the steps required. We have to have the resources to get the notaries and all the things that we need to do. However, I believe that the environment that you have created has been powerful. It's been comforting, and it's just powerful. And I believe that this is a best kept secret. And I'm like, this shouldn't be a secret, but I believe that we have a responsibility now to go out and empower other people. So thank you.
Thank you so much, Miss Kenya. I appreciate you saying that so much. And that is what we're here for. We're here to be a resource. We're here to guide. We're here to provide you with, with the tools, knowledge, with everything that you need in order for you to execute. So you are so right. It is going to take you doing the work. And that's
Yes.
why I have an entire team that's going to hold you accountable, right? Ivy, Billy, there's a bunch of us on here that we want to be able to follow up with you. We want to be able to help you get unstuck. We want you to come to as many workshops as possible, right? So that you can begin to get familiar and you'll begin to retain the information because you've heard it 3 and 4 and 5 times. So that's why it's like community is very important to us. And so we just want you to stay connected, right? We're on Facebook, we're on Telegram. Some people don't have Facebook, some people have Telegram. So we're on both platforms because of the diverse population. But just stay connected because not only are we doing these workshops, but we're also doing master classes too, so that things outside of the workshop or areas that we want you to learn about outside of the trust, right? We're able to teach you through the master classes and we're able to bring on industry experts to just share that information because we're committed to your growth. We're committed to you actually creating generational wealth, and we're committed to you establishing your legacy. So I appreciate you being here.
Yes, and one other thing, the value
Yeah.
that I invested in this is priceless. So if somebody has an issue with the investment, I don't say price because this is an investment. I mean, if you spending $2,000 on a handbag and you don't have $2,000 to put in a handbag, what are we doing? And so I'm a little forward as it relates to our community and just people having a quality of life. And so I just want you to know that the price is invaluable. One other question. Is there a checklist in the back office of like what to do next? Like check 1, set this up, check 2, do this. Like, is there something in the back office that gives like a 1, 2, 3?
That, you know what? That is a recommendation actually, because we don't have that. So we have
I can help you with that.
Well, thank you. Thank you. Please, please, please. Listen, it takes an army. It does.
Yes.
Yes.
Like
Yes.
step 1, step
Yes.
2, step 3. And
Yes.
if you haven't checked it off, you haven't done it, you know?
Yeah. So we have a checklist of the things that you need in order to set up your trust, but then we don't have a checklist after you set up your trust. So we need that checklist.
Okay.
So,
Yes.
and this is why I asked, because you have no clue, from where we started to now, like
I'm
how
sure.
the things that you guys are telling us is like, hey, Christina, we need this. It's like, here you go. Like, we're going to establish it. We're going to create it. We're going to provide you with the template. We're going to do it. So whatever it is that you need, absolutely, because we don't want you to get stuck. We want you to actually implement everything. That's why we call it a workshop, right? Because you're supposed to be working.
That's right.
It's not just me and Jeff and Keon and Brian. No, you got to
You got to do the work. Yes,
Yes, you
ma'am.
have
Okay.
to. You have to. It's a part of the formula. You have to. Like, not only are you working here, but now you got to work the trust too. A lot of people, they're like, I don't have time. I just want to hire a trustee. It's like, no, how are you going to hire a trust? Like, you need to learn the ins and outs of how to operate a trust, please. That's why people make the biggest mistakes and then they wonder why the second generation lost everything.
Right.
Yeah.
Wow.
Yeah.
Wow.
Yeah.
Well, I'm looking
Yeah.
forward to learning more and I appreciate you. And I'm sure we're going to be talking more.
Yes, yes. Let's talk today.
Yes.
Thank
Talk to you
you.
soon.
All right, awesome. Okay, so anybody else have any comments, anything that they would like to say? Do they want to share their experience? Anyone else? If not, that's okay. So I'm just going to check the chat. So Edgar said, thank you, Christina, for all this amazing resources that you bring to us and the team. I'm always grateful to have come across your channel about a year and a half ago, and I'm still learning and will continue to learn from your amazing classes. Thank you so much, Edgar. I appreciate you so much. And It's always refreshing to see you on the workshops because I know that like the light bulb is going off, and I know that the more that you come to the workshops is the more that you're actually going to like one, gain that confidence to know, yes, I can operate as a trustee, but also two, for you to be able to learn more because the experience is different. Even though the material is the same, the experience is different, right? Because yesterday was the first time that Keon came, right? So that was a different experience, right? But then the people are also different. They're asking really good questions that maybe we didn't think about, right? Or even about their personal stuff, right? Like Cornelius just asked about his fleet of vehicles, right? It's like, okay, well, we didn't talk about that last workshop, right? So we're just constantly learning and having new experiences each and every time that we gather together. And I just want to reiterate that the workshop is, you have access to it. So it's lifetime access, right? So as long as we're doing workshops, you can come to each and every single workshop, right? And so we do them every 4 weeks. The next workshop, let me tell you the dates for the next workshop. The next workshop is July 6th to the 10th, right? So we're going to be meeting here 11 to 2 Eastern Standard Time, July 6th through the 10th, okay? So just lock in those dates because you guys have lifetime access to attend every workshop that we have. So thank you so much, Edgar. I really appreciate you. So Ramondo said, best investment I've ever made by a landslide. My biggest blessing so far. Thanks to Christina and your whole entire team. Looking forward to growing in this community and light and love. So Ramondo, thank you so much for investing in yourself. Thank you so much for taking that leap of faith to join the community. And we do want to be a blessing, and we know that you're also going to be a blessing to the community as well, because we know that all of our community members contribute, right? And that's why we call it a community, right? Because it's not a cohort where you just come and you go, right? It's a community where we're going to do life together. Why? Because we're all like-minded individuals. We are all trustees. We're all heading in the right direction. What's that direction? We're establishing a legacy. What's that direction? We're building generational wealth. What's that direction? We are focused on asset protection, right? Why? Because we want the things that we're building today to last many generations into the future. And so if we're all having the same mission, we need to do life together and have access to each other. So thank you for saying that, Ramondo. I appreciate you. So Maya said, this has been an amazing experience and I'm extremely grateful to you for doing this and taking your time to graciously teach us difficult and important life-changing information. Thank you, Christina. Thank you, Samaya. I am so appreciative that you are here. I know that this is your first workshop, and I am grateful that you are recognizing that this is very difficult information, but it is very important, right? This is a part of us getting our affairs in order, right? This is a part of us protecting our, the things that we work so hard for, right? It could be our cash, it could be our properties, right? It could be anything. So it is very important, and it is life-changing because now you get to be that person within your family that gets to impact everyone, right? You can impact your siblings, you can impact your parents, you can impact your children, right? And so a lot of us, we're like squeezed right in the middle, right? Because I know, Samaya, you were mentioning how you want to help your mother, right? Which is beautiful. And that's the same situation that I was in too. I wasn't born into a trust organization. My parents didn't have a trust, right? I had to set up their trust, right? So it's up to us, and we're right here in the middle to where we have to help the older generation, which is our parents, right? And then we have to help the younger ones, which is our children or our siblings or the next generation. So we are that vital piece right in the middle. It's going to take us to be able to do the difficult things like Samaya is saying, right? It is hard. It's not easy. This is like learning a different language. A few workshops ago, they're like, this is like going to college. Like, what are we doing here, right? So It is, and it's sacrificing. You guys are sacrificing your time. Look, it's almost 3 o'clock in the afternoon here in the East Coast, right? So that means that you've been here for about 4 hours, right? You're sacrificing your time to learn this information so that you can change the trajectory of not only your life, but your children's life, your parents, your siblings, right? So it is going to take you to do that hard thing. But when I tell you it's worth it, it is absolutely worth it. It really is. So Derek said, thanks. Have an awesome professional team. Grateful. Look forward to completing the Trinity. Yes, I love it. The Trinity. It is so beautiful. And then the next one says, my biggest dilemma is how do I make sure that the trust lasts for generations when I transition? That's why you have to have that succession plan in place. That's why you have to make sure that whoever you're nominating to take over after you is qualified, right? Make sure that you're choosing the right person, right? Make sure that you have a plan B in place as well, just in case plan A doesn't work out, right? So having a plan is what's going to ensure that your legacy reaches the next generation. Trust me when I tell you. Can I use my foreign EINs for my trust? Yes. So with that being said, you guys, I love you guys so much. It's time for us to start the weekend. So please go ahead and fill out the survey that's in your email. Go ahead and book the call with Jeff Badu and his team. Go ahead and click on the link if you guys are ready to get started with the life insurance. If you want to be on the team or if you want to get your policies. And then we have a master class coming up next week, okay? So just go ahead and pencil that in, that on Tuesday at 6 p.m. Eastern Standard Time. So this is next Tuesday, which is the 16th, okay? Brian Dorsey, he is going to be coming in. That's our funding manager, okay? So he is going to be coming in and teaching us about OPM and how to build the business credit so that we are able to get the business funding that we need so that we can then utilize those funds for the trust so that we can acquire the assets. And assets are specifically like real estate, okay? So with that being said, I do not want you to miss that master class. So put it on your calendar, but you will be able to receive a reminder. So we are going to send you an email reminder. We're going to send you a text message reminder with the Zoom link, and we're also going to put it inside of the Telegram chat as well as the private Facebook community, okay? So don't worry, just pencil it in so that you know that you have somewhere to show up on Zoom on Tuesday at 6 p.m. Eastern Standard Time, okay? So right now, that's the only workshop that we have or a masterclass that we have coming up. We do have other masterclass that we're planning for you related to real estate and related to the private money banking model, okay? So as soon as we're able to secure the dates and times, we'll be able to share that information. And then the last thing I want you to no, once again, is that our next workshop is July 6th to the 10th. So please go ahead and pencil that in because we want to see you here in this space and place so that we're able to, implement the things that we need to implement and operate within trusteeship. So without further ado, I love you guys so much. It was a pleasure hosting this workshop, the Wealthy Trustee Workshop. So I will see you guys next week. Oh, wait, no, we have a masterclass on Monday too with Ken. So our crypto leader and educator, Ken, he will be teaching us on Monday for crypto. So he's going to be teaching us how to establish our MetaMask wallets, okay? So we'll see you next week, Monday and Tuesday, for the 2 masterclasses that we have scheduled, okay? You guys have an amazing rest of your Friday, TGIF, and I will see you next week and have an amazing weekend. I love you.
Thank
Bye,
you,
everybody.
Christina. See you next week.
Thank
Shalom,
you.
shalom.
Shalom.
Thank you,
Thank you.
everyone.
Thank you. Love
Thanks,
you
Christina.
guys. Thank you. God
313.
bless
Thank you,
you. God bless
Christina.
you. I love you guys.
127, 127, 162, baby.